Good morning, everybody. Welcome to another Daily Market Bar brought to you by Mike Bjork. Today is Thursday, May 28th. Hope you guys having a great day so far. We do got a lot of data to go over today, so we'll jump right into it. We'll start off with every Thursday, we get the initial jobless claims. So last week we had, each week's been kind of decreasing by a little bit. So last week we had 2.45 million people apply for unemployment benefits for the first time. This week's report forecast is calling for 2.12, and it came right in expectations at 2.12 million people. So these are, of course, for last week's numbers. Uh, so they're always delayed by 1 week. But in any case, it's getting slightly better each week, which is obviously a good news in that case, even though this is very high numbers in comparison to we were getting only about 200,000, 220,000 people prior to the pandemic. So pretty big change right there. Now, also, we got the second look at our GDP. The final will come in next month for the first quarter GDP. So the initial reading came in at minus 4.8%. Forecast is calling for no change at 4.8%, and it actually came in a little bit worse at 5% for first quarter GDP. So again, this is the second review of it, and the final review will come in next month. Now, we also got durable goods orders for the month of April. So in March, it dropped by 16.6%. Forecasters count for more of a drop to minus 18.2% because that was when we obviously had the height of the pandemic, when lockdowns, everything was totally shut down and didn't really happen until end of March. So we're seeing more of the dramatic numbers in April. April's numbers should be hopefully the bottom of what we'll see going forward. Hopefully we'll see some improvements heading into May once we get those numbers probably next month. And it came in at minus 17.2%. So not as bad as expectations, but it did worsen some. Now, when you remove big ticket items like transportation, we had minus 1.7% in the month of March. Forecast account for a pretty big drop to minus 14%. It had a pretty good drop, but not quite as bad as expectations, which was at 7.4%, drops by 7.4%. So, still a bad number, but not as bad as forecast, obviously. Now, pending home sales, as we can see, had there was a disruption in the market, especially in March when we had all these wacky movements in the markets from both the bond market as well as the stock market. In March, it dropped by 28.8. I'm sorry, 20.8%. It dropped another 1%, 21.8%. These are the highest numbers on the record by, according to NAR. So, so that kind of shows you how much of a direct correlation what we had with this pandemic and the lockdowns, how much of an effect it had on pending home sales. Now, we do still have relatively tight inventory levels, so home prices are still expected to rise at a modest pace. We have a lot of pent up, for certain price points, more affordable price points seem to be the target marks where there are price wars in many areas on these. So we're seeing those out there as well. Let's kind of move on here to the headline news. Stocks are up so far this morning. They did end up upwards yesterday. Nasdaq reversed and ended up closing a positive. Today, of course, they're kind of shrugging out the Hong Kong and tensions with China that is still in the back burner. That's been kind of shrugged off, even though that should be something that they should be paying more attention to because that could escalate and put the wet blanket on the stock market and obviously create that correction that they're probably going to be due. If you ever saw the euphoric numbers this week, it was showing that it's way overdue, that it could be correcting soon. And right now, there's this euphoric feeling over the reopening. So even though we're seeing bad data, they're not realizing that it's going to take time for these to get back to normal. And at some point, it's going to probably reverse and correct itself out. Plus, with the tensions with China, will probably even exacerbate that even further. So just be careful if you're playing with the stocks that these things are underlying factors that will be playing. And the optimism isn't really, it's just more feelings versus actual numbers and data. So we'll have to kind of see how things do play out. And that things will probably take longer than what most people probably are expecting to return back to some type of normal. So let's go ahead and take a look here at the bond market. Bond market is fighting below its floor, excuse me, at the 50-day moving average. It's currently about just a hair under that. It's down about 3 basis points. right now. So though this is sitting at 103.51, and right now we're down about 103.50 or 49 right around there. So just be careful. If we do have a convincing break below this, we got a long ways to drop, and that means rates will worsen. So right now we can cautiously float any rates. If you are in a process and have not yet locked, you can cautiously float, because at some point as you can see, it's going to get a stranglehold. It's got to make decisions, either drop further or upwards. And I think once the stock market realizes how much of an issue China and how much longevity it's going to take, the duration of this rebound, and get this euphoric out of there, China, I think the stock market growth or correction that will help out mortgage rates. But in the meantime, we don't know when that's going to take place. We could see potentially worsening rates right here as well. The Fed is expected to buy about $4.2 billion worth of mortgage-backed securities. So again, that's kind of helped propping things up a little bit. It is going at a modest pace, and they are slightly declining each and single, pretty much every single day or week for this part. So here's some yields. Again, it's fighting its 50-day moving average right now. It's rated about 0.7 right now, 0.70 right now, just here under this 50-day moving average, and trying to fight above it. And if we can get this, it's, like you see here, it's also going to kind of squeeze. If we can get this pushed down lower, this will help out mortgage-backed securities as well, and then in turn help out interest rates, mortgage rates here. All right, so right now I'm going to say unchanged for mortgage rates for pricing. We should be pretty comparable to what we saw yesterday. And if you guys are in California looking to buy a refinance, please reach out. The best ways to reach me are either direct message me or email me. Email will be the quickest response you'll get, as I get that messaging a lot quicker than I do through direct messages. If you guys are ready to go, I will put a link inside the description, and go ahead. You can answer some questions to get things started, and then if you have any documents you want to upload, you're welcome to obviously upload it through there. It's nice and safe and secure for you guys. All right, you guys have a great, wonderful day. Thanks so much for watching. We'll see you in tomorrow's video. Bye bye.